So I think there's two things worth looking for. Number one, you're absolutely right. Historically, sort of big plunges in demand have led over time to substantial recoveries. And there's an element of the Bitcoin story which is very compelling. Frankly speaking, in many ways, it's a better gold than gold. But I think the other thing that investors need to watch for here is a decoupling of the different crypto ecosystems. Bitcoin is a digital asset and it's positioned against gold in terms of its utility, which is to say you hold it as a hedge against inflation, but you don't do much with it. Ethereum is a programming infrastructure for business transactions. And while one of the things that's really interesting to observe is that while Bitcoin adoption has kind of moved along a little bit, the Bitcoin developer ecosystem isn't very robust at the moment. But on Ethereum, companies are building huge numbers of business applications. They're building lots of tools, technologies, and services. Ethereum is a kind of an internet of value and value creation. And I believe, we have incorrectly lumped Bitcoin and Ethereum together. They're very different kind of solutions and value propositions. Ethereum is a technology platform that's getting wide adoption. Bitcoin is a digital asset. Its place is potentially in your portfolio and comparable to gold. Those are really different stories, and we need to see a decoupling. They've been so tightly coupled together, right? Your chart is just right on there, but I think we all expect to see some kind of decoupling over time.
Indeed, it also says a lot about the maturity of the space as well, if that and when that decoupling eventually takes place. Paul, just finally, what happened over at Celsius? It seems as if on the way down, we often see crypto exchanges and these crypto businesses starting to blow up. On the way up, there's always a lot of activity, new businesses opening as well. But with regards to Celsius, do you have a theory on what's actually happened here and what could possibly happen in the future?
So very specifically, we never comment at EY on any specific company or client situation like this. But I come back to what I said at the beginning, right? The market is in a lot of turmoil. We're seeing a flight to quality. One of the things that I talk to people over and over again is they say, well, what is quality? How do I know which company is better than others? How do I believe one party more than the others? That is the really big problem here, is that people do want a flight to quality. There's arguments that erupt on Discord and Twitter, and they are fact-free zones. And in the absence of facts, in the absence of regulators, in the absence of auditors, it's rumor and opinion and kind of angry tweets that rule the marketplace, not sort of data-driven discussion of what is and is not risky. And that's the big issue here, is if we want to have a flight to quality, that's a good thing for markets. It needs to be grounded in some kind of fact base about what is the definition of quality, what's regulated, what's backed, what isn't, who's verifying things. We don't have enough of that yet. So I still see a really, really big payoff in the future for improved regulatory oversight. I think that things are moving in the right direction, and I hope that we'll see more of that because we'll avoid these kinds of rumor and driven discourse and market movements.